Hey there, welcome to the Mortgage Rate Forecast with Scott Criss, your mortgage rates and news, July 5th. Let's start with the charts. Here's what we have. Mortgage-backed securities are trading at $104.25 this morning. Really, really high. Look at this. Look at this trading pattern. Our next floor support is coming in below us at 103.80, and the next floor support is right at 103.40. And as far as resistance, again, I went back 2 years in the charts. Historically, at least in the last 2 years, there's nothing to really show where our resistance is going to be at. So I can't really share that with you right now. If I could guess, it may be somewhere around 102.40, 102.45. So here's the reports. Factory orders came out worse than expected. That was helpful for mortgage-backed securities. That's given us a little bit of pop. But we talked a lot about Brexit here over the last couple of weeks, and I'm sure you're tired of hearing about it. Obviously, that's a big reason for this crazy run that we've been seeing. But that just goes to show you that the international economy has a huge impact on our local stocks and bonds. Local meaning United States stocks and bonds. So here's the thing, remember Greece? Remember how Greece had a major impact on stocks and the bonds, and we actually saw when Greece was starting to fail, we actually saw the bond market really improve. And here's the thing, I want to kind of put on your radar Italy. Italy, they're at 18% on their defaulted loans right now. Italy could be the next Greece. I mean, it could be. So let's keep an eye on it. But between Italy and Brexit, we see the pound weakening, and the pound is actually at its lowest value since 2013. So all of these things are really impacting, even though it's abroad, it's still impacting our United States economy, and it impacts the bonds. And so that's why we're continuing to see these crazy gains. It's not so much because the U.S. is doing poorly. It's just so many other countries who influence us are not doing so well right now. So here's to kind of quantify where things are at. Bond markets obviously improved quite a bit. So we were averaging in the month of May about 102.40. Now we're trading at about 104.25. That's $1.85 better. And so here's the thing, Freddie Mac, and the source is down here, you can look it up yourself. Freddie Mac reported the average interest rate in May to be 3.6% at 0.6 points. So here's the scoop, man. At 3.6 at 0.6 points, if we were trading at 102.40, we're now trading $1.85 better. That means instead of paying 0.6 points, one might actually expect to get a similar rate and actually get a point credit back, if not maybe a lower rate. So anyway, this how much, this just shows you how much it's really improved since May. So crazy, guys. Anyway, here's our forecast. The analysts are a little inconsistent. One of the analysts is saying, hey, we might pop down to 103.80. Another analyst is just totally bullish. Hey, I think we're going to get better, better, better just because the international economy is just in the tank right now. But where the analysts are consistent is they're consistently bullish on the long. So they do think, 30 plus days out, we could see bonds actually continuing to improve. So here's the scoop. From my report last week, bonds again exceeded my expectations. So I'm going to forecast trading. I'm going to stay between 103.80 and 104.40 through this coming Thursday. How does that impact you? Well, with where we're trading right now, you're looking at, you could see a price improvement of maybe a quarter point, an eighth of a point, but you could see some price selling off of about a half a point. So, and for your 30-day lock considerations, here's what I would say. Based on, I'm going to go with the analysts. I would say float unless you're planning on closing in the next week or two. Then take your gains and run. Otherwise, I would say float, and let's see where this market takes us. Anyway, that's it for this forecast. Join us again on Thursday, and hey, tell us what you think. What do you think is going to happen with interest rates? What do you think about the international economy and how it impacts us? We'd love to hear from you. Leave your comments down below. Don't forget to like the video before you go. And hey, if you want to keep up to date on what's happening with mortgage rates, mortgage market, hit the subscribe button at the top left. You can always unsubscribe, but you'll get a little alert when we upload new videos. And if none of this made sense to you, but you're a consumer, you're getting a mortgage, and you're like, hey, what the heck's all this bond stuff mean? And I just want a good rate. Click the little guy at the top right, and that'll take you to Mortgage Bonds 101, and it'll teach you the fundamentals of how these bonds and how the trading here impacts you as a consumer, whether you're getting a mortgage in Florida, Alaska, or here in California. Anyway, that's it for now. We'll see you on Thursday. Bye-bye.